there's something very interesting going on in the market, okay? And I mean very interesting. And certain stocks are starting to catch major bids. And not just major bids, but it's absolutely incredible, okay? A good example of this is Fubo, right? Fubo is up another 16+% today. Now, do you want to know how shocking this performance has been? Guess what the 3-month performance is for Fubo stock. You are about to have your flapjacks flipped. Check this out. This stock is up 100 and almost 65% in the past 3 months. If you could make 165% in a stock over 3 years, that's a win. 5 years, that's a win. Heck, even 10 years, that's a win. This stock's done it in 3 months. It's absolutely on fire. This is a speculative stock I hold, right? And we were down heavily on the stock just 3 months ago or so. And now, I mean, we're up. We're literally up on the stock. I mean, that's a shocking move here. And, you know, it's interesting because I've been trying to see, like, what's going on here with Fubo, okay? Like, why is the stock moving so much? Is it just something with the market that it's like, you know, let's bid up these sorts of stocks, like these you know, let's call it more speculative stocks, or, you know, going more risk-on environment? Like, what's going on here exactly, right? So it was interesting. So I went to David Gandler's, who's the CEO of the company, his Twitter page, right? And I just want to see, like, tweet out something recently or something, you know, what's going on here. You know what's interesting? I found a few interesting replies, right? This one's talking about, he's from Korean Fubo Group, right? So he's an investor, I guess, from Korea. You know what else is interesting? I was going a little lower, and this guy says, I'm also an investor from China. So I don't know, maybe Fubo's getting around in Asia or whatever as an investment opportunity. Like, I don't know what's going on there. I just thought that was a little strange. Like, because I do sometimes think, I'm like, where's all this money coming from? You know, because if you were to get a stock to go up 165% in 3 months, you're going to need some big money coming in. And I understand Fubo is not a huge market cap. It's less than $1 billion market cap, right? But still, we're talking about a market cap on Fubo that's probably 800 million, just off the top of my head. That's just a guess. So, you know, you need some serious money coming in. Now, this announcement happened recently. Spotify's former vice president of design joined Fubo here recently. So maybe there's some excitement around that, pulling in a big name to kind of help the company out. I don't know what's going on, but the one thing I'll say is, like, I'm very pleased with this performance because this is the slowest time for Fubo's actual business model in terms of signups. This is always like July is the worst. And then at the end of August, things start to pick up again. But it's interesting because obviously we're in July now at this point in time, right? The end of August, Fubo starts to pick up majorly in Google Trends, and obviously massive amounts of people sign up for it in football season, and hopefully we see bigger numbers than we've ever seen throughout history. So far, every single football season, basically interest for Fubo goes to a new record high. So hopefully we see that again this year. And so seeing the stock price doing what it's doing makes me feel pretty confident. And I kind of was thinking, because Fubo did go up on price recently. So basically the folks that are going to be signing up for Fubo this football season for the first time, right, they're going to have to pay a more substantially high price than people used to have to pay in past years, right? But the thing I was looking at kind of from the value proposition is, it's still the best deal for bang for your buck you're going to get out there, even though they've gone up in price. So the company should be able to get closer and closer to profitability here and show better and better margins between the advertising business. They hired a kind of a marketing expert to build out the advertising business who just started it was around the end of last year, beginning of this year, so we should really start to see those advertising numbers coming through. But, like, you know, their plans are starting at $75 now, but if you're used to traditional cable, like most people with traditional cable, they're paying 100 plus. So I think, like, Fubo's going to continue to steal customers away from ultimately, you know, like let's call it the traditional cable companies, because most people, for their cable bills, especially if you got a bunch of channels like you want to have, right, you're paying $100 plus, and Fubo comes under those price points. Even what I have, which I have like the most insane plan Fubo offers, right? Because I'm a huge college football fan, so like I need all this like ridiculous amounts of channels, and I like to watch 4 games at one time and things like that on a Saturday, right? For everything, it's still less than $100 a month, and like I couldn't ask for more. Like literally, like that's insane, right? Like you look what I have, and that's just unparalleled kind of in the marketplace. So kind of looking at it from this perspective, I wouldn't be surprised if Fubo continues to attract a lot of customers. Now, in terms of Fubo's stock price, I think the important thing to understand about a stock like this is this used to be a $40 plus stock, okay? And so just understand, if this momentum continues, it can easily go to $10 to $20, and it's not even like a crazy thought. for the stock to go to $10 to $20. You know, like it's been a whole lot higher than that in the past. This stock would need to go above $40 to break a new all-time high. $40. Okay, it's a $3 stock. So nonetheless, if Fubo continues to execute, they get to profitability and closer to profitability as these quarters tick along. They continue to grow the advertising business in a substantial way, and their users are just much more profitable than they used to be, you know, a couple years ago. I mean, the sky's the limit for this company. That's all I know about that. Okay, so it's a speculative stock, but we'll see what happens there. But interesting in terms of the stock price performance. Now, the market is about to be wild here, folks. Okay, so June CPI. I don't know if you guys know the expectations, but here's the expectations. Okay, so according to FactSet, the CPI is forecasted to rise 0.3% in June after rising 0.1% in May. Core CPI is forecast to rise 0.3% for the month versus 0.4% in May. The CPI, which core takes out energy and a few other categories, right? The CPI year over year is forecasted to rise 3.1% in June after rising 4% in May. Now, this is a big number to keep in mind, okay? 3.1%. Core is also going to be important, right? Core CPI year over year is forecasted to rise 5%. These are the very important numbers to keep in mind here, okay? Now, I think we're looking pretty good. I think we're looking pretty good in terms of coming in with kind of what the street's expecting here. Maybe a slight beat, I don't know, we'll see. But I think we're looking pretty good as far as that goes. But where things are going to get interesting is not just in terms of what the numbers are, but then how does the Fed react to those numbers, right? Because the Fed's very data dependent, so they're going to look over these numbers and kind of make decisions in terms of what they want to do with rates moving forward, but also in terms of the commentary, right? Are they going to sound more hawkish, dovish, or kind of middle ground? Now, Jerome Powell, I think if, you know, especially if core CPI beats, let's say core CPI comes in the 4s, and let's say, you know, let's say real CPI still comes in at 3.1, something like that, but we have core in the 4s, I think it's going to be really tough for Powell to come out super hawkish. You know, he can do it. I just don't think the market's going to buy it at all. I think he would have more credibility if we come in with, let's say, a 4 something on core and 3.1 for just overall CPI. I think it'd be better and have more credibility if he comes in just kind of in middle ground. He's not really coming across as dovish. He's not coming across as hawkish. He's just kind of in the middle. I think that would be the best thing for Powell, and I think the market would appreciate that. If he comes in super hawkish, he's just going to look like no one's going to believe him. They're just going to call BS. You know what I mean? Because if you're talking about CPI coming at 3.1, this, you know, at peak we were at 9% plus. It's come down pretty much every single month now for a year straight, right? And it's clear as day, like we're getting closer and closer. Basically, the Fed wants to get this down to 2%, right? I mean, we're 1 percentage point away from where the Fed wants us now at this point in time. So we're getting really darn close. And we know Fed funds rate is 5% plus. And there's supposed to be lags when it comes to that, right, in terms of how it hits the economy. So my personal opinion is we're looking pretty good here. We'll see what Powell does. I think Powell should just be kind of, you know, in between. I don't think he should come across too hawkish or dovish. That's my opinion. And I think the market will respect him if he does that. If he comes across super hawkish, I don't think the market's going to respect that